There is a single insurance decision Americans make every year that quietly costs their family $200,000. And the wildest part? The person selling it to you knows. They know it's the wrong choice for you. They sell it anyway. Because they get paid more when you pick wrong. Today I'm exposing exactly how this works, what term life and whole life actually are, and which one your agent doesn't want you to choose. Let's get into it. Welcome back to Money Made Simple. We break down US money topics in plain English. No jargon, no fluff, just what matters. Hit subscribe if you're new. Let's go. Picture this. You're 28 years old. You just had your first kid. You're scrolling Reddit at 2 am thinking I probably need life insurance. Smart thought. So you book a meeting with an agent. You walk in. They smile. They pull out a brochure that looks like it belongs in a Lamborghini dealership. Glossy. Gold lettering. The word investment everywhere. They tell you whole life insurance is the smart choice for people who plan ahead. They tell you it builds cash value. They tell you it's protection, plus savings, plus tax advantages. What they don't tell you, they just earned a $5,000 commission off that one signature. And if they'd sold you the better option for your family, they would have earned $200. 5,000 versus 200. Now you know why they're smiling. Let me break down both options so this never happens to you. Point 1. Term life. The simple truth. Term life insurance is dead simple. You pick a number of years, usually 10, 20, or 30. You pay a monthly premium. If you die during that term, your family gets a tax-free check. If you don't die, the policy ends. No drama. No catch. Here's a real number. A healthy 30-year-old non-smoker can get a $500,000 term policy for around $28 a month. $28. That's one DoorDash order. For $500,000 of protection for your family. The price locks in. So if you sign up at 30 paying $28, you're still paying $28 at 50. That's it. That's term life. The end. Notice how short that explanation was. Now watch what happens when we talk about whole life. The agent suddenly becomes very interested. Point 2. Whole life. The complicated pitch. Whole life covers you forever. As long as you pay, you're covered. But here's the trick. Only part of your premium goes to the actual insurance. The rest goes into a cash value account inside the policy. That account grows over time. Slowly. Same 30-year-old. Same $500,000 coverage. Term life, $28 a month. Whole life, around $400 a month. That's 14 times more money for the exact same death benefit. Point 3. The math that breaks everything. Now here's where things get spicy. Because the agent will tell you whole life is an investment. Let's actually run the math. This is the moment most people throw out their whole life brochure and never look back. Let's say you can afford $400 a month for life insurance. Option A. Pure whole life. All $400 goes into the policy. After 30 years, your cash value is worth around $150,000. That's based on the typical 3 to 4% return whole life policies actually deliver. Option B. Buy term and invest the difference. You buy a term policy for $28 a month. You take the other $372 and dump it into a basic index fund, like a Vanguard S&P 500 fund. After 30 years, at the historical average of around 7%, that account is worth around $450,000. $300,000. That's the gap. Same monthly cost. Triple the result. Now you understand why your agent doesn't want to do this math with you. Point 4. Why agents push whole life. So if whole life is mathematically worse for most people, why is every agent in America pushing it? One word. Commission. When an agent sells term, they make about 30 to 50% of your first year's premium. So on a $28 policy, about $150 total. That's their whole paycheck from selling you. When an agent sells whole life, they make 50 to 100% of your first year's premium. On a $400 a month policy, that's up to $4,800 from your one signature. Same agent, Same hour of work, 32 times more money. Now ask yourself, which one is your agent motivated to sell you? I'm not saying every agent is shady. Some genuinely believe in what they sell. But when somebody's paycheck depends on convincing you of something, you cannot trust their math. You have to do your own. Point 5. When whole life actually makes sense. Now I want to be fair. Whole life isn't always wrong. There are exactly 3 situations where it genuinely makes sense. Let me walk through them so you can be honest with yourself. 1. You're rich. Like actually rich. We're talking estates above $13 million, where estate taxes become a real problem. Whole life can be a legitimate estate planning tool here. If that's you, congratulations. Hire a fee-only planner who doesn't sell insurance. 2. You have a family member with lifelong special needs who will require care after you're gone. A small whole life policy can guarantee that support continues no matter when you pass. 3. And this one is honest. You have zero discipline. If you know you'd spend the difference instead of investing it, whole life forces you to save. It's an expensive way to do it. But some savings beats no savings. For everyone else, about 95% of Americans, term life plus your own investing wins every time. Point 6. How much coverage you actually need. If you're still watching, congrats. You're already smarter than 90% of insurance buyers. Let me give you the simplest rule for how much coverage you actually need. The rule is 10 times your annual income. Earn 60 grand a year? You need around 600,000 in coverage. Earn 100K? You need around 1 million. It's not perfect, but it gets you close. Then bump it up for 3 things. 1. Your mortgage. If you owe 400,000 on your house, add that. 2. How many kids you have and how young they are. The younger they are, the longer your family needs your income. 3. Future expenses like college. A 4-year degree now runs about $150,000 per kid. So a real example. Someone earning $60,000 with a $400,000 mortgage and 2 young kids needs about $1.3 million in coverage. Sounds like a lot, but remember, at $30 a month, you can afford it. That's the magic of term. Point 7. Who actually needs this? Quick reality check. Not everyone needs life insurance at all. Here's the honest answer. Got a spouse, kids, or parents who rely on your income? You need it. Yesterday. Got a mortgage with a partner? Co-signed loans with family? You need it, so they don't get crushed by your bills. Single? No kids? No debt anyone would inherit? You probably don't need it right now. Keep that $30 a month. Buy coverage when your life changes. And one final tip, buy it while you're young and healthy. Term life premiums get more expensive every single year you wait. A 30-year-old pays roughly half what a 50-year-old pays for the same policy. Lock in your rate now. Your future self will thank you. Quick recap. Term life is simple, cheap, and right for 95% of Americans. Whole life is expensive, complicated, and makes your agent rich. Run the math yourself, buy term, invest the difference, and lock in your rate while you're young. That single decision could save your family $200,000 or more. The insurance industry hopes you never figure this out. Now you have. I want to hear from you in the comments. Has an agent ever tried to sell you whole life insurance? What did they say to convince you? Drop it below. I read every single one. If this video helped you, hit subscribe so the next one lands in your feed. Check out the video on screen if you want more money breakdowns like this. See you in the next one.